Anyway,
what's that onion thing you got?
It's literally spring onion, just like some steroids.
Spring onion. Welcome back, Market Mastery. Now you see the spring onion. He's got it live. I don't know why, but it's there. So what does that have to do with capital markets? Everything or nothing. We'll see. But welcome back. We're at a different camera situation. I'm not going to be looking at you at all today because it's on a different setup. I'm at home. Office is a little fucked, so we're here. But it is setting up actually to be quite an optimistic market. I mean, I just got off the phone with a dear friend, Peter Tuchman, who you all know at the New York Stock Exchange, Mr. Einstein of Wall Street. And we were talking about just the sentiment overwhelmingly positive at the moment. I'd say just closing the Thanksgiving week where it did is a weird turn of events. But, hey, I'm here for it. I like it. I think it's good. I think that, I don't know, at least I feel for the first time, maybe in about a year, there is a bit of realism to all predictions, all guesstimates, all wonder, all worry on both sides, that there is some sort of realism to what expectations are looking forward. And there is a little bit of clarity on interest rates, amongst other things that have been the sticky wicket in the wheel that makes it not turn and that makes everyone freak the fuck out. So we're going to talk about all of that. Today, you get a special bonus, a little special treat. You will get Spy Playmaker broken down, the performance. You get to see it live. This is how the sausage is made. We're going to literally break it down level by level, explain why each level matters, what we're going to do with it, and the best way for us to trade it looking forward and give you a real taste, because we figured, Black Friday, who gives a shit? Why not? Money isn't real. Let's just give it for free for a minute, and you could just see it. Like, it's not a matter of does it works. Like, so just like I realized, just watch it and then you'll see, and then you'll get it. This is the machine to just produce income for you and us the next, I don't know, however many years we survive this on this barren rock. That's what it shall be. So let me check in here. What are your thoughts? I mean, what's your temperature on the market right now, guy?
I mean, I don't know. It's the thing. Like, how many times have we seen in the
thermometer past right up there? What
year and a half that it's, we see the drop, which is just a simple retracement, right? And we just get that V-shaped recovery right to the upside. So honestly, it's the levels. Like, it cut out the noise. It's just one pivot. Like, you look at last week, it's just perfect. Breakout, close, retest, close, target, target, target. You do it as a day trade, it was 64%. If you do it as a swing, it went up to, I think, 150%. Yeah. This is it. So actually, let me throw that on the screen here. So we do have the we have a promo for this. So we have 50% off. It's normally $19 a month. We're going for $9.95. Make sure you get it while it's hot. Screen right up here. Yeah, looking at the SPY now, I mean, it's still holding trend.
Yeah, it's I don't know, man. Who knows? Who even knows? Who even knows? Where'd StreamYard go? There you go. Not being on a desktop sucks. I will tell you. On the share screen situation. There it is. All right. So let's. Not having a mouse also sucks. Okay, let's get rid of all this madness. Make it go away. Poof. And what do you have? Up and to the right. Not for long. Maybe. Let's see. So, we got to go to a different one. Good thing there's a bunch of them. There we go. How close is this gonna be? This is just tracking the SPY, right? So this should be the same, right?
Mm-hmm.
Okay, good. Oh, wait, no. What is... Oh, let's just do SPX. That chart's not crazy, and it's transferable, so the idea is the same. So you just cut off the digit. So again, this is the actual S&P, so that's why this value is 6,812. What you're used to looking at on the SPY is just 681. So that's simple. So just looking at SPX here, already had this mapped. Yeah, I would say my thesis is the same. So until we print a higher high, so until it's over 686 macro trend, this is for everyone. We're going to start on the big picture, as big as we're going to look, which is really just like medium term. So no more than a year or two out. We're going to start with the big picture. Then we're going to zoom it in, get more granular as you go along to understand each piece only after you understand. Most people go the other way. I like to do it this way because I think it's just how my brain works. So you're all along for the ride and you're just going to have to experience it as it is. So in looking at this as an art form, right? Because that's really all trading is putting together like a bunch of different techniques, skills, expertise, theses, if you will, like ideas from different places and putting them in different spaces, seeing them with different faces. Almost rhymed. But nevertheless, it's the ability to take what you've learned about people and math and all these other fucking things that go into a business and putting a number on it. And then also making sure that your number is accurate based on what the company's given you, right? Because we don't control any of these businesses. None of us are getting Apple on the phone and telling them how to do their jobs. So we have to trust that what they're telling us is the truth. And I guess you can to a degree because it's audited, right? To some degree. Now, is it all a lie? Yes, but that's a different conversation, different level. For the sake of this argument, right, we don't know what's going on in this business other than what they tell us. So assuming all of that is true, we can apply what I'm about to show you. Again, assuming all that is true. No, not that it's in a vacuum, just assuming that it's all true, that what companies are sharing on the forward guidance statements is accurate. And we're also making another assumption that they're going to continue to do what they say. So you need to have a quality score that underpins this. That's why I started the big picture in every sense. But my goal and what we've done here is made this so simple that you don't have to worry about all the other fundamental elements that go into like actually stock picking, which is what's required to make money these days. You get to just experience the end of it, which is here's the instrument we've chosen and the way we're going to use it. And here are the thresholds of risk and reward based on that strategy. We've already calculated it. So there's no guessing to be done. It's just waiting for the market to hit those levels so that it does what we know it will do, is finding predictable pockets of time. That's it. Because the past will repeat itself if the conditions are similar enough. So again, if we can just understand how similar the conditions need to be, we can be smarter than everyone else. Predict the one thing that might cascade and be set up for those outcomes, or waste all your time trying to fix, manage, and control shit until you actually get it. I don't want to waste that time. So I want to get paid up front, and then I want something on the back end too. I treat everything that way. So when we look at these, we just see a line on a chart. Like, it's that simple. I guess that's the goal. It's not the goal. It's what we accomplish, is to get it to the point where all you, as the beginner trader, seasoned trader, hell, some of you have been trading longer than I have. To you just want to know the what, where, and when. That's what we're putting all of that shit I just talked about into the what, where, and when. And those three things together equal how you make money and how I make money. So looking at this as just raw data of just numbers on a page, pieces of a puzzle, and then applying kind of a general overlay of this is typically what people are doing in this day and age in these areas, we can get a really serious picture of like exactly how this thing is going to perform over the next, I don't know, week and a half. What would you say our time window is for this? Is typically like 10 days, right? Like we can extraordinarily predict with extraordinary accuracy the next 10 days, but no more than that.
Yeah, I mean, well, yeah. I mean, if we're doing contracts 2-3 weeks out, yeah.
I'm talking about just.
And also, think about the trend. Are we going? If we're picking up trend again, you can just let these ride to expiration. You know, if you got multiple contracts.
No, I'm asking you and me as a team working on SPY Playmaker, what we produce, which is the end trades of exactly this trade at this time in this way. Would you say that No, I forgot what I was even asking. God damn it.
3 to 4 days is what I'm tracking.
Oh, 3 to 4
for
days. Yeah, like what is the benefit window of what we predict, right? Like how long does our prediction hold typically? 3 or 4 days, you'd say? Before we need to make a new one?
Months. These same levels hold up over time. Some of these levels,
holy shit. Okay, so
yeah.
Kobe, I guess, is better than we thought. Then I even was.
It's a lot better.
It's better than what I even was going to tell you. So great.
I mean,
but let's just assume it's 10 days then, because I get what you're saying. Like, you're right.
Since COVID,
but I would
say
prior to
the ride down,
to reposition,
the same levels worked. Yeah.
Oh shit, you're right. They're timeless.
Literally. So if you guys are mapping this out on your own charts, like these can be played both directions, right? Like and over time.
Oh. Perpetually. Wow. Look at that lifetime of value given to you and for pennies on the dollar and for minutes of your time. What do you know? So I'm going to pause really quickly there. Say hello. I see we got a Hyman Shoe. What's up, man? I don't think I've seen you here before. So hell yes. I love new faces. If you're new here, say what's up. Check in. We love new faces. If you're old faces, you already know we love you. So might as well check in anyway at this point because you basically have to because of our relationship. So why not? To new and old. But to kind of wrap up that thought before we get into the actual technicals of it, the idea is simple. We're taking all of that stuff from like what it goes into the independent businesses that the S&P fucking chooses at the end of the day, which is millions of credit. It's stuff that requires teams of hundreds of people. We are able to quickly aggregate data. Like that's what our skill is we can scaffold quickly and aggregate a lot of different pieces into one puzzle and put it into one frame, right? So because we're able to do that, we can give you a very simple and concise, here's how the market's going to react when it hits this level. We're going to take advantage of this upside and this downside. And we'll already have done the math. We've already calculated the profit. We've already calculated the risk, and it's done. It's a machine you just let go. There's no personality to inject. There's no need for any of us to be involved, right? In a few years, I think this will be a simple automation. I will no longer be selling this to anyone because my algorithm will be running it with my money. So this is the opportunity is get it now because it will be gone. When I can punch this into an algorithm, I will take it away from the world. Why wouldn't I? It's business. It's supply and demand. I'm not going to let everyone else have it. So get it while it's hot, baby. But I would say that it allows us to really condense that information into very easy to digest pieces of these exact contracts that are going to hit in our perspective, and they're the ones we're going to be trading. So I don't know, love it or leave it. I think it's been absolutely crushing, and right now this does not scream optimism. So now I'm starting to like, what was Peter talking about, man? I hadn't looked at the chart at all. I was just kind of going up what's the sentiment on the New York Stock Exchange floor. He's like, oh, it's positive. But I guess that's a bigger frame reference. To me, it looks like more chops coming. Like look at that, got scooted off. Didn't even price a new high. Not even a little. Unfortunate.
Looks like we had buy side at the end of the day, though.
Well, yeah, that's amazing carrying it, but like, oh, this is where. So this is the interesting part where I think that what matters is. Yeah, I'm going into all fucking that. I don't know who this even is. So anyway, it's a weird place to be where the short term conflicts with the long term story, right? Like this is where we need to be really nimble and I would say efficient in our decision making. In that, like, this is where you can make an insane amount of money. If you can be in the right position when power changes hands or large scale money changes hands. So like when a shift occurs, right? Like we're talking, it was bullish to bearish, right? Or bearish to bullish. Those are large scale changes that occur, right? Like it's not just one thing, it's a bunch of dominoes. So when you can be just slightly ahead of the curve for large changes like that. So for instance, to zoom in and give an example, when the SPX traded all the way down to about 650, so it lost this moving average. Everyone was like, "Oh, this is not good. Oh my God, holy shit!" And then pressed down. Right, you could see sellers were just trying to jam this thing down. When all that was happening, it was in direct conflict with the SMA. Right, so the opportunity there was to bet that this thing was going to rip right back up or that it was going to completely crumble at that pivot point about 650. It's right where I would have done it, to be honest. Look at that, past lows. You just want to be the guy that's sitting at that point in time right there with money in both hands. That's what we're trying. That's what we're setting you up to do, to just be sitting right at that spot. Hey, when it gets here, all you have to do is choose which hand you want the money to come out of. You're going to get 10 times what you put in. You just kind of have to pick which one. If they're approaching you from the left, give them the money in your left hand. If they're approaching you from the right, give them the money in your right hand. That's literally as simple as we're making this. Now, if they approach you from the left and you give them the money from the right hand, there's nothing I can do to help you there. You know what I mean? Simple directions. Give the money from the hand, the side that the guy's approaching from, right? Because it's bullish and bearish. You have two choices. If the trend is going bullish and it's upside and you bet bearish because we showed you what we expect to be bearish if it hits a certain level, it is what it is. So again, this is all about setting you up in a position of power and success. So you have all of the most actionable pieces of information you need. Treat your money with respect and tell it which way to go. So once we get to this point where we start to zoom in, this is where it's like, this is, I think, where some of you may just want to exit here. Look, I don't care anymore. I don't want to know how the pizza's made. I just like good pizza. Fine. You get the emails, you love it, you make money. Fine. This is for those of you that are like, hey, maybe I don't care to master the charts, but I would like to know how this is being made, just because I like being invested in the things I invest in myself, right? So if you're paying for this, you want to know that you're getting the most out of it. So you want to be involved. I love that. So to do that, so basically saying to those of you that want to dive a little bit deeper, that's what we're going to do now. If you don't, then this won't interest you. So that said, all right, let's do one quick pause. Is everybody to this point? Just give me a thumbs up or a thumbs down, a 1 or a 0. 1 is good, 0 is bad. Do you get it? Are we on the same page here? Are we living in the same reality? Can we all agree at this point what we're about to do is now break into the why is the short term bucking the long term, and what can we do to make the most money about it? That's the question we're asking in our exploration here.
All right. On step. Let me find that. Yes, this week we do have inflation. Oh, we have Powell speaking at 8 p.m. tonight.
Oh, what a weird time. Why 8 p.m.?
Man, it's a little late for Grandpa. The
Isn't that a weird time for anything like that? Like, what are they doing?
I think Bull was talking about it earlier. Let me find it.
I'm just wondering, what are they addressing? Like, what data could be coming out at 8 p.m. that's like we got to be all huddled around at 8 p.m. talking about this? Fucking government, dude. Like, what are these guys doing sometimes? You know what I mean? And just so everyone gets it, they don't know any more than you do. They are not smarter than you. They are not smarter than me. They're not, honestly, in most cases, more educated. Now they have the degrees, but are they actually more experienced? No. It's just people. Well, yeah, maybe they are doing that. But I'd say also, you got that everywhere. There's power. It's a powerful thing. All right. So it looks like you guys are all kind of following along to some degree. So right on. So basically what we're going to do now is kind of just break down here's where the market looks to be behaving and in what direction that behavior is headed. What are going to be the consequences of said behaviors? So I can't give any context. Can you look up that why the fuck is it at 8 p.m.? Can you look that up?
Yeah, I'm looking it up.
Why? Who decided this? It blows my mind.
All right.
I'm going to get real stuck on that APM thing. I can already feel it. It's a snag. It's like a halt to everything until we figure it out, but I'll keep going anyway. All right. So 681. Okay. That's our daily. So we're good there. Weekly is strong. This is the contradiction. So zooming out, nothing but chugging along. But in the same sense, look at how overextended we are from the moving average, right? You never want to be too far from the moving average. I feel like the patsy or the fall guy or whatever, that's always where they're introduced, is when you get too far away from baseline. You don't want to be that guy. Because again, if you bought 470 in December of 21, you had to watch your money get erased. Now it was coming back, but it feels like it's getting erased, right? Like it really does feel like it's gone. Like it's a terrible feeling. And then you start to question every decision you're making. So for 2 years, you had to hold as a beginner with certainty. Nobody's doing that, dude. Nobody's doing that. That's how they have us. That's how like large scale institutional firms have calculated to the minute what you will do. They know you. If you're someone who defaults to unconscious processes, they've already calculated the profit margin on your life. Knowing that, right? They also have calculated your tolerances to risk and everything else. So when you look at the way some of these are trading off these averages, they're expecting you to panic if it violates kind of the basic tenets of investing, right? So it broke the moving average for what, a week? But that looks terrifying to a beginner investor that doesn't know better, right? You sell at that point. You go, shit. I know to kind of trust my bases of like, if it violates the trend, get out. But that was a washout. If you've been doing this for 10 years, you'd get it, right? So, excuse me. So they prey upon you to make kind of default decisions that will be mostly fear-driven. We're not going to do that. If you're here watching this, you're not going to do that because you're here. So you're smarter than the rest. I am too. We all are. It's awesome. So basically, I guess it's more brave. Sorry, I didn't want to make that as It's more of a bravery involved. I think there's courage in venturing into the unknown where no one else is, and there really isn't much information, but there's also a safety and trust that can be built in getting that information because you're all discovering it together, right? That's why you're all here inevitably. We all discovered how to do this together. I was just at the front of the line finding shit the fastest. This is the reality of it. It's what it is. So in doing that, look at this as a collective, right? We need to buck these kind of trends. That's why this product exists, is to help you avoid those things, right? This is an informational product to give you the power, the edge, whatever the hell you want to call it, to give you the strategic edge to not make decisions that have been pre-calculated by large-scale funds and institutions to stabilize you economically, enrich themselves in the process, poison you physiologically, enrich themselves in the process, and then treat you for said illnesses that are a result of that poison. And yes, you heard it right. Once again, profit from it. Wake up. If you're here, you don't have to do any of that. It's a beautiful thing. Beautiful thing. All we're talking about is how this one vehicle, SPX, the SPY, this basket of stocks behaves, and how we can set ourselves up at different points in time to take advantage of the way it behaves. So you're just really flipping the lens, right? Instead of being the product, we're taking advantage of it, right? It in of itself is predictable as much as most people are. So we're just reversing the lens, looking at it just to give some context as to like, hey, why is what you're doing any different or even worth doing versus just giving this to some advisor to schlep into some mutual funds. No one can position your money like you can. No one will ever give a shit about your money. Trust transparently. No one will care about it. It's a number. Only you care about it because to you it means stability. Say to you it means your house. To you it's your family Christmas or Hanukkah or whatever the fuck you celebrate. To them, it's a number that they'll deal with if it becomes a problem, but it's whatever. Just like at your job, you're not worried about what's going on with some executive at your job. You don't give a shit. If they have some problem that's way above your pay grade, you don't care. Same principle applies to your money. They don't care. People are predictable, right? Just understand yourself and you can understand all this. So anyway, this is giving you the power to not be subject to that same serfdom. You don't have to participate in that kingdom. The final thought is this really, like, what's the only way to win war games? What do you think?
Well, teamwork.
By not playing at all. With war games, somebody always dies. They're playing war games with you. Do you think you're going to be the one that's left standing? I don't think so. So what I'm saying to you is don't play at all. Using this is not playing at all. That's my point. We've already found a calculated pocket of time. We could just capsule, maximize our advantage, take advantage, move on. It's not going to change it. Well, it could change your life, so I don't want to say that. Anyway, long-winded explanation of saying, like, I'm happy you're here. You found the right thing. What we're going to do is strategically position you to basically take advantage of every move this makes because it's all predictable. It's been predictable since the beginning of time because it exists as predictable. So we just reverse the lens. Now, instead of them predicting us and just pillaging us, it's just, no, fuck you. We're going to play the same game. We're going to trade this and play this the same way and predict this. So that's what we're doing. It's like this working is why things like Polymarket even exist and are taking, sweeping the nation, right? Everybody loves being able to speculate, guess, and then put a dollar sign on it. Don't get sucked into any of that. That's a silly quest. Don't get sucked into any of that. So here we are. This is predictable. This is done. Don't get sucked into who's it, what's it, maybe, dopamine. It feels great. Oh my God, it's awesome. Fuck all that. You should feel nothing doing this. That's the goal. Feel nothing doing this, but a deep, quiet sense of pride that you did a hard thing over and over, even though it didn't feel like it made that much sense. And now you're reaping the benefits while everyone else is still trying to figure out square one. You're already on top of the mountain. So looking at this for what it is, if you had been positioned to take advantage of this washout, when the market flushed, broke the moving average, all the beginners said, shit, I know I'm supposed to trust these moving averages, so I'm going to have to back out. They flushed them out, took their bags, and then what happened? They wrote it up to double your money, right? So again, the original question was, to tie it all together, what about the guy that bought right here? Well, he waited 2.5 years if he even could stomach it, because I couldn't have. I wouldn't have been able to stomach those kind of losses if I was down that much. I would have struggled with that. So that guy held all that time just to get right back to even 2 years later. Like, I get it. Have a long-term fee, but like, does anyone want their money standing still for 2 years? In an economy and honestly a time in which things are moving at the speed of light. Like, you can't have that. 2 years will kill you in this day and age. 2 years is a death sentence. So we want to make sure that that's never you, but we can only do so much. So the idea is, had this guy been positioned with something like this at his disposal, he could have ridden this downside to a 10x of what any other product or institution could even offer, right? So the whole idea here is just being in the position at the right time, taking advantage, showing you that over time, being in the right position actually beats just sitting, buying, and holding. Because these huge swings that have occurred, that's where all the real money's made. And we're going to set you up to do that in the short term, which means then you're in the game for the long term. So to kind of take that long-winded explanation, I just to hit it all while we're here into where are we at now. We came down, those that were positioned already for this bucking the trend and selling off made the most money in the last couple weeks, right? That was the opportunity, was trading the downside from 681 to, what is that, 655? $25 swing with some of these options contracts, guys. That's, I mean, Porter, you'd probably better judge that than me. How many hundreds of % do you think that'd be?
Oh, well, I
If
mean,
the
taking the
SPY
full
moves
swing,
like
yeah,
25
200-300 at least.
Yeah, so that's like just to give you guys a reference point of the upside. Just, well, what if I just buy the S&P? Yeah, cool, do it, but you need the leverage. All the rich people that you've ever seen on TV or met, or maybe you know them, or maybe you are one, they'll tell you it's leverage. Getting rich on other people's money. So use your money as trust, collateral to leverage. Options give you the easiest way to do that without having to call a bank. You don't need any of the complexity involved in leveraging any type of instrument. Options are done for you. I think options are one of the greatest inventions of all time, but very dangerous in the wrong hands. It's genius because everybody can win if you do options right. So whoever created that, I wonder if that guy's still alive. We should try to meet him. Genius. But we just want you to have the right option and for you to be sitting in the right spot so that you can see the whole thing so you can make the right decision. So we're going to set that up for the next couple of weeks because as you can see, guys, look at these swings. 682, 665, 684, 660. And I didn't even count the upside. That's huge. If you put, let's say, $1,000, right? I would assume most of you listening have $1,000 in some way, shape, or form. If I put $1,000 in these contracts here and I ride that swing, say it even doubles, that's $2,000, right? Doubles again, but that's $2,000 that doubled, not 1,000, because I already doubled it on the way down. Right? That just took you in what's that time period? November 5th to November 12th in 1 week. You could have realistically seen, pending the right contracts, right? 1,000 turns into what, 5? Without any sort of maladjusted risk. Like you're not taking any sort of insane risk. You're just trading the pivot points. It's beautiful. So let's look at what those are, because I mean the past is just the future with the lights on. If nothing changes. So
Give me September. It's been the same range in SPY from 650 to 685.
Yeah, we can go to the actual chart now because we're going to zoom in anyway. Wow, this is insane when you're on this little computer. Now being on my desktop. It's insane to look at how busy this is on like a laptop screen. All right. So, God damn it, he keeps trying to go back with the 2-finger thing. Okay. So if you look here, basically 682 is the washout. Couldn't stay at 683. So again, guys, I want you to like really like don't overcomplicate this. If you're new to just kind of watching how we do this, it's very simple and straightforward. If you can just kind of visually imagine these lines and just kind of see them as they are, right? When you see it curled up like it's a wave breaking, right? That's typically means buyers are kind of lining up. Some demand is strengthening, right? And ideally also the trend is up. So you could see it a little bit right here. Like I'm just trying to teach you to look for certain shapes and patterns that make this really easy to jump right in. So if like you can identify these first couple things, you can jump right into understanding a chart. It's not that fucking complicated. Like everybody, like finance, the world needs you to believe this is like some sort of sorcery that like you couldn't fathom. So you will always pay them to do it. It's just the flair. I feel like they just have the flair for the dramatics. It's not that complicated, really, when you zoom out in this day and age. So I want to teach you how do you take advantage of just understanding like basic shapes, patterns, and visual elements. So for those of you that are visual learners, if you've your whole life felt like, well, fuck, write it on the board, then I'll get it. If you're that kid, this will make so much sense to you. But if you're not that kid and you like hearing it and understand you're going to get that too. I just like talking to my audience, right? Like I want to understand what I'm getting. So I can I'm going to listen to the whole thing. Maybe I want to tune out for the next 5 minutes because I'm not a visual guy. I like knowing that stuff. So that said, we're going to talk about how the visual elements kind of tie into the actual dollars and cents of what makes us trade certain ways. So actually, yeah, you do want to listen to the whole picture. I don't know why I said But anyway, here we are. We're on the hourly chart. I feel like that gives us like bite-sized enough pieces, but not too big or too small. Because
Agreed.
when you're looking at this chart, guys, like through the lens of like, I don't know what the hell I'm looking at here. I don't want to have too much going on, but you don't want to be too zoomed in either. So we feel like the 1 hour chart, which you can see right up there at the top, just click on that trading view, boom, 1 hour. Each block is just an hour of this trading. So for 1 hour, this is tracking people buying and selling it back and forth. And the where it starts and ends is where it started and ended. It's that simple. When it started here, people were paying $6.73 for it. By the time they were done, people were only paying $6.55 for it. It's just that simple. Same product. It's just what it's being sold for here and there. And then the timing is just how much of that time are we condensing and saying is a pattern enough that we're going to trust it. So the hourly is good. The 15-minute is kind of your alternate to that. So after you look at this on the hourly and you go, hey, I'm seeing a shape that makes sense. I like the pattern I'm seeing here. I'm not kidding. That's how I do this. I see the shape. I see the pattern. Eventually you can get into like the character of it, which that's a completely different thing for those that just like want to go to expert and beyond. That's that side quest. But you can really put all of this and condense this into a few key ideas to help you understand exactly what's happening now and is most likely to happen in this market with this instrument based on where it's trading. I'm going to take a quick. So before we basically break down the next day and talk about the scenario, just a 1 if it even is close to coherent, a 0 if it's like we need to rewind and reimagine all of that because it didn't land at all. I'll take the lead from you. So basically type 1 if that like, hey, that made sense. I get what you're putting down to a degree. 0, I don't know what that's talking about. That helps tell
when
me
this
whether
started, it was just simple. I mean, it's one line range, right? Like simple confirmation, 15-minute close, buy off a retest. Stop loss is 15-minute close in the other direction. Like it's really that simple. And the candle closes, honestly, is the game changer here. I mean, for me, yeah, the levels, I like 1 hour. Like you spy, if you're going anything below 15 minutes, you're going to get wild wicks. But because of these contracts, you're like seeing maybe 5 to 7% downside on options, like on these wild wicks too, for like minimum, 20 to 40% upside. Like that's insane to have that consistency.
He said something really important. The candle close. What he's saying is, while this candle's forming, right, it's going up and down and up and down. We're not zooming in to the 1 minute chart and just gluing to the screen and going into panic mode. Don't torture yourself, for Christ's sake. Don't torture yourself. We're not doing that. But what he is saying is very important, is that where the candle closes is the only thing. That's the only data point we give a shit about. I don't care if it goes to Saturn and comes back. I want to know, where did it end? Because that's the truth, right? The people can manipulate the market in the in-between. All we care about is the finality of what occurred. As long as we can have that endpoint, we're golden. That's why this is beautiful. We don't care what anyone does. It doesn't matter, because as long as they do their job, right, we'll know what we need to know to make our predictions, to make our money. Beautiful thing. So that said, it doesn't matter where the candle goes. It matters where it closes. Like, I didn't want to really like put an exclamation point behind you saying that, because that's a brilliant call out. I wouldn't have thought of to say. He's thinking of this as someone who uses it every day and now does it every day. So he's got both perspectives. I want you guys to really make sure you understand the close, the benefit, or not the benefit, the requirement of why you have to only abide by that. Because if you follow the wicks and everything else, you'll be lost. So I'm very glad you said that.
Same with the news, honestly. I think a lot of people just like the human need to be right and to understand why things happen, right? First thing, like, why is the stock down? Why is the stock up? Like, You know, there's so many variables at play with there that
nobody actually knows. Honestly,
yeah, and it doesn't matter. It
knows.
doesn't matter. It's money, and like what the
matter.
value of the money is below a certain level and a certain level. Yeah, it's really that simple. I mean, keep in mind catalyst, of course, because that's when you're gonna get volatility. But you know, just because like there's a rate cut or isn't a rate cut doesn't mean it's going to go up or down. They often have the both directions. You know,
sometimes it goes opposite.
Yeah,
like think of that, guys. For 30 years, it did one thing, and these days, it just goes opposites. I'm gonna do the opposite. Just trust me approach. Dumb work. You used to be able to buy a basket and just chill. Say thanks to your parents. It's over. They used it. This is the difference, I think, of what Gen X and millennials like offers. Like we understand sustainability because we're on the unfortunate receiving end of those that will just extract every fucking penny. Like, dude, you know they did it without any thought. Zero contemplation of consequence. Like that generation blows my mind. The ignorance and incompetence that they've demonstrated. Like I get it, but like, dude, come on. At a certain point, you can't just say, we didn't know. It was your goddamn job to figure it out. And you failed. So now you're done. It's over. Ta-ta. And we have to just kick them out systematically. Just be done with it. Just be done with the bullshit. Trade the things that are predictable. Don't get sucked into the things that are magic. So before we just hit this for bullish and bearish, are there any kind of final thoughts as someone who literally like you cut your chops trading this pretty much? Like this is how you gained mastery. This, in my opinion, at least from what I've seen you do. This one really accelerated your, like this framework allowed you to build your, like, that was your scaffolding to just like, holy shit, I know exactly what
yeah, especially when you go to higher time frames like the weekly. Because that's what I prefer.
So what do they need to know to do that? That's my question. Tell the good people what they must do. What do they need to know that only you would be able to share because you did it? You learned through this way. So you know.
Yeah.
So what's like final thoughts? What do they need to know going into this next technical 15 minutes?
Keep like the amount of variables at play to a minimum, and realize you can't control anything. Like you're not a market maker. Keep it simple. Honestly, keep it simple. And this is exactly what we're doing with these options. You know, this same strategy scales out to long swings. It's the same thing. You know, you're waiting for the candle close, but instead of like a 15-minute or 30-minute, you're waiting for a weekly. Buy off a retest, target the next level. Stop just underneath of that entry point, right? Like 4-to-1 risk reward. That's it.
Boom. You heard it from a guy who literally helped build this and honestly became a great trader building this. So there you have it. If you want to make this work, that's how you're going to do it. So going into these, and you said something that, fuck, I wish I had on a t-shirt. It was excellent. Yeah, you control. Yeah, it's about the control. So we control nothing, right? We control nothing. You don't have any control except that now. Great. Now we have something to work with. We can predict a lot because those motherfuckers have no control and they're so predictable. So all we have to do is watch them to understand them, to anticipate them. And we have an instrument to benefit from that, right? Again, it's our version of in reverse. It's the same thing. So now we're going to do that process of bullish, bearish, determine direction and understand kind of, remember, it's always leaning. Like it's never just, it's bullish forever. That's not an absolute. It's in a bullish state. States change, right? Like sometimes you're tired. Are you tired now? Maybe not, but not always. But also, you could be a little bit tired, but still very interested and engaged, right? It's a state. It's not the same as I'm sad. Well, I guess kind of, yeah. Those are states in a sense. Nevertheless, that'll go on a different tangent. But for the sake of this, like you're just trying to understand the states of the market at that time. Like here, it's in a bullish state, and here's the tendencies. And here's kind of the confirmation factors that we look at to be certain, to as much as one can be. And here are the things we look at as risk of like, oh shit, if these start happening, even though it's in a bullish state, if these three little things happen, we know it's going to shift into a bearish state. Again, being in position to take advantage of that change in hands, if you will, turn of the tide, that's where you make the most money. It's also where you take more risk. For those of you that just want to set it and forget it, easy does it route, this is that too. That's why this is the ultimate utilitarian tool. Maximum efficacy. This is the most Austin thing I've ever created in my entire life. It just is. It is, dude. It's maximum efficacy. You waste no time. You waste no money. You don't act unless action is absolutely required and will benefit you. Like, dude, come on. It's insane to me. So let's dive into it. Looking at it right here today. I mean, like, really weird print. I didn't even look at this today. So you got to give me more context to what the fuck happened.
Well, honestly, I don't really even know either. But I mean, like in the chat, one morning with you guys here, what do you see on this chart right now? As far as trend, as far as
I'm asking, what was the event that occurred? Something happened. Like this thing ran up and then just completely just got. Oh god, damn it! Sorry, but this thing just got sideswiped. God, I need to trim my mustache. Dude. This is bugging the shit out of me. I can't stand it. Anybody have this kind of mustache problem or gets too crazy and just starts prickling your nose? It's a terrible feeling.
Yeah.
Ugh. Anyway, wish I had a mustache guy. I could just come trim it up. So that's what we need to do. Write that on the list. We need to be that rich to have a mustache guy. Just come give you a quick shave. You don't have to leave your chair. That's how you know you really made it, when everybody comes to you. Like, you don't leave the house. Get a haircut at home. That's a big goal.
I'm quoting that. I'm putting it on a motivational poster. Yeah.
But yeah, no, seriously, what the fuck happened? Something had to have happened, because it was fake. Look at the volume. So whenever you're looking at this, guys, like on the hourly chart, you can make a few inferences. Like, volume you always need. So it's like this chart can say one thing, but it's kind of like if it doesn't have, like, you need some way to fact check it, right? Like, because it can look one thing, but you need to kind of know, or at least have a degree of how much trust can I put in this. That's where the volume comes in. So if a lot of people are saying the same thing, odds are it's going to continue in that direction. If the bullish spike is occurring, but there's no volume, it's only a few things. Somebody knows something. They're trying to trick me, you, me, us, or no one knows, and it's madness, right? It's usually one of the first two, but we just want to know, based on what happened each day, what the general kind of consensus is. Like, is there a lot of fear in the market of an upcoming war, right? Like, those are the things you do need to kind of be dialed into. Just know the general geopolitics of the world to the degree that any citizen should. Like, you're a citizen of the world, you have a responsibility, just kind of a general idea of what's going on in the world. In my opinion, if you're an adult and you're in a safe and stable environment, like, that's what, in my opinion, we all should be doing. So in doing that, you should already understand what your kind of risks are going into any market, right? Like, if there's tensions in some certain country that could affect the market, you should already kind of know that. But then looking a little bit deeper at day to day, were there any major news events or things that were driving it? That's what I'm asking him, is like, were there catalysts? Like, was there like numbers that came out today at, what is it? 1300? Like, there had to be something, some sort of academic data report. Something had to have occurred. Know what those things are. All right. So still abiding by what we had already carved out. So,
All
right.
You did a lot of volume at the end of the day.
Yeah, but we need to know what that was, though, before we can proceed. That's why we need to know, because that's going to shape the rest.
I mean, as far as what I'm seeing, it's just in the morning we had PMI and ISM manufacturing. But like, see, tomorrow we have employment numbers, PMI again, ISM services, jobless claims, and then But we also have the interest rate decision this month too. So I feel like any talk on that is going to get volatility.
So
And Kenny, I need a tumbler.
We're just gonna ask.
That would have been perfect in the mountains this weekend.
This guy's fucking driving off doing God knows what. Where were you driving from those 6-9 hours?
Pechabun, Pudabak. It's a village up in the mountains in the North Thailand. Yeah, went with some OG friends. One of my good friends proposed as well. We had fireworks. Just real quick, we had fireworks. Like the ones in the box, like shoot off in order. And whoever's dumbass idea it was is to lean it on a rock so it shoots up in one direction. Yeah, the rock fell over the first hit. It hit a transformer. Half of the mountain just lights off, and we still had the fireworks just shooting up. It's like a beacon. Like, oh yeah, who's responsible for this? It's us. But the last firework hit, and somehow the power went right back on. So, yeah, it was a wild.
Yeah, it would have sucked had that not changed. So it looks like really just high profile. Okay, so NVIDIA flipped, gained a loss. So that definitely is going to drag it down. That's a whole different story of I don't know who thought their earnings were going to be what. It's the whole thing of like, whoever thought NVIDIA was going to continue to do this over and over and over again? Mm-hmm. And why would everyone set that expectation? Like, what the hell are you doing? Again, back to just common sense. I think this is where guys like Warren Buffett really do take a different lane that is just a different level of elite, where they're like, I think what they're saying more so is like they don't want to be involved in industries where this kind of shit occurs because it's not predictable. It's at somebody else's control. So again, I guess kind of count to our point, kind of to me cements the point of this. Find predictability where it exists. Don't mess around with that stuff. Because again, in my opinion, the buy in NVIDIA was when it was at $13. Like, there's nothing to talk about now. Like if you ask, like my honest, like if someone was like, I'm dead serious, because people ask all the time. I'll tell you the truth. Well, if you're asking me now, you missed it. Like, move on. It's over, dude. You missed that one. There's hundreds of them. But it's like, no, I want to be in that one. It's like you're asking for something that doesn't exist from someone who can't get right. Time. Like you want to go back in time. You can't. And that idea is exactly what they've calculated and priced you down to the fucking penny for. And trust me, they'll extract every dollar from you as long as you subscribe to those system of beliefs that they can predict. Or you could just say no, and then go to this place and make all this money. That's kind of the choice. So it looks like really it was just like a tech flip, and that was really all it takes. And then everyone panics and goes, "It's over." So I guess that gives us a little bit of a toss up going into tomorrow. Like it doesn't really give the market, I would say, like a really poignant direction of confidence. Is really kind of saying, okay. God damn it!
I'm seeing that you are getting like on this hourly, you're getting a lower low, lower high here. So,
yeah,
I mean, honestly, I would ranging might be.
It just looks bearish, and maybe I just don't want to say it, but it just looks like bearish as fuck, and that's unfortunate. This is unfortunate. Maybe that's the reality. There's a little bias squeaking in there of not wanting to admit what is, in that the runneth. But see, that's the thing, though, is like. We're also in a world of delusion in which I feel like we might. Ooh.
Yeah.
Like I feel like they got to let the pot simmer and maybe even overcook a bit through the new year. It's just kind of the risk they're going to take and that they have to. Because again, you guys got to think of this like you're not in any sort of like there's nothing that's happening that's not been again decided by 2 or 3, 4 different organizations. It's just a matter of what are they going to do. Like, are they going to let it run? Are they going to stop? Like, again, there is no what if. And trying to understand like which may be the smartest direction that they're thinking right now for the long-term benefit. I do believe there's an underpinning idea of good to some degree in which people just want the markets to continue. And we are making those assumptions that that's all true. So given that, I would say that like we're probably just going to go to more fun land. Honestly, like I think upside's just imminent in the medium term. It just is. As stupid as that is, as much as that doesn't make sense, it's what this is saying. So looking at the way it's kind of building now, it does look like it's setting up for bullish. So again, we're talking kind of medium term here. Now we're going to zoom in to like, well, what are we thinking is going to happen this week so that we can understand how we can make money now? So over the medium term, it looks like it's setting up to probably just see some continuation to the right. I'm not saying it's all up and to the right. It's mostly flat and up and to the right. So I'd say it's probably going to end up just honestly tinkering around, I think, the 685, 690. And that would be a healthy expression. That would be a good thing, right? In the medium term, you want to see that like over the next couple of months, you want to see this kind of range trade, to be honest, and find slightly newer highs, but nothing crazy. So now when we look at the 15-minute, we can understand, okay, great. That's what it should do over the next couple of months. How do I zoom in each week and grab a bite of it? And this is how. So now that you understand the general kind of what do we think will occur in the broader scheme, now we zoom in to understand like what's happening right here and now, today, tomorrow, and the next day. So the thing I would say that is supporting all bull thesis that could exist, right, is really the moving average is just maintaining that, right? Investors subscribe to certain things. The 200-day is a pretty damn standard one that all people abide by to some degree. So looking at the fact that it's intersecting with that on a trend line, okay, great. That means it's an easy, predictable point if it's going to maintain that direction. So it's the most reasonable to assume that it will, right, until it doesn't. So we're going to set up both. We're going to set up the scenario one, which is this just continues to ride trend this week, very predictable. Or two, this flushes out and tricks, tricks people for a week or two, making it think it's going to flush, but then it's just going to come right back. You're prepared. We're going to be prepared for both. And it's actually like a perfect setup to go this deep into it live. And like, it's like you couldn't have asked for a better setup because this will play out swimmingly. Like there's a ton of money to be made here. So again, look at the way it's behaving and try to look at this like a little kid and just draw lines and just kind of see how they're shaped. Again, swooping up is typically means demand. Breakout's trying to occur. When you start to see the tops get a little bit rounder, that's when you can tell that like sellers are starting to pile on and put a lot of pressure on the stock. So you can literally see that expressed here. Like, look at that. It starts to get rounded. And then look what happened. Gap down. Look at this bottom. See how it's a little more jagged and just kind of slopes up quickly? Look what happened. And then as you tell, again, rounds over and then curls over again. This is just an expression of like waveforms, right? Math. None of us are doing, right? Behind the scenes, it's calculation of millions of things. So it's going to abide by those same tenets. So if you can kind of apply that, as we talked about in the beginning, take things from other places and apply it here, I think it can help a lot of you that are newer understand a lot more quickly. If you can put it in terms that you already understand. I can't do that because I don't know what you understand. So I can only try to do it in the way that I got it. So from here, it's really on you to say, oh, shit, that reminds me of fill in the blank. As long as it's common sense, it will probably apply. So I love what we're seeing here. Again, having the moving average is like a big blanket of security, and that the moving average is trusted through 200-day. So we're going to start with the bullish sentiment and kind of decide right here that this trade is probably going to present itself bullish. That's direction one of our anticipations, right? We're making two kind of anticipations here. One being bullish is what it's setting up most likely. But if it bucks the trend and just goes counter the trend, some sort of variable happens, a missile strike, it could be literally anything. Something happens, we're going to be locked and loaded with the exact contract that we need for the downside and in a position to where we'll get an outsized return. That's the beauty of this. Like, what's your upside? It's an unlimited question. It's perfect. So we're going to start off with the bullish thesis. What do we need to see? We want to see this moving average maintain this 200-day. So again, you want to see the stock behave in a good way. You want it to be a good boy, right? That's all you want. Is you want it to be a good boy, and you want it to be predictable. So try to find patterns and setups that are very predictable. This is one of them, right? The assumption is it's going to continue to follow its moving average. Now, what's the point in which this could break out and get interesting? Well, I think it's give or take right about here, 681.28. Here's why. We already were here back in November 26th, so end of November. And this was a critical price point that we couldn't get past. Like, buyers and sellers couldn't agree, and the sellers won, and it got pushed down. So all that did was tell us, like, that's a critical level where people are going to fight. Good. We need to know that. Then you can see the stock, it opened up way above that point. So there's no battle to be had there, right? Until there was. And this time it broke right through. So basically it tells us that they were trying to hold it down and they failed because the second go around they pushed right through. So we know at least that 681, give or take, when it hits that point, it should kind of like kerosene. It should just go boom, boom. And we know that because it's what just happened, right? We're just, again, assuming all things equal, it moves quickly through that zone. From 681 to 683, it moves very quickly through that zone. Oh, thank you. And so basically what we're going to do is we're going to sit and wait. Like it's really like any pounds predator would, I guess, and just wait for the opportunity. So when we see this trading and you're looking at your browser, wherever the hell you're watching the market on, right? All we're looking to see is does this go to 681.10, 681.11, and watch. And as we watch, it may break up. So at this point, we're on the 15-minute. It's very important. That's a very important detail for you guys to know. We're on the 15-minute chart. We're not talking about any other time frame. Does not apply. I don't care. I didn't say it. I said 15-minute for a reason. On the 15-minute chart, we want to see this candle break 681.10 above that point, and we want to see the candle close there. And then ideally, if you want to be extra safe, watch the next candle, and hopefully it even opens above that point, right? Then you could have maximum security. So remember, the more you take your time to like the more security you want, the lesser your reward, right? The market only rewards risk in proportion. It can't do anything else. So if you want more safety, you have to give up some of the reward. It's just reality. It's balance. So knowing that, guys, here's kind of the layers to that. One break, that's a good amount of risk. If you're seasoned, I think you can trade off that. Just a simple break, not even the candle closing. So kind of in contract, in violation of what I'm even saying, right? Because again, I'm talking to primarily people that are going to hear this for the first time, or you've not done it all that much. And then there's a small handful of you that have done this for years and years and years. So for those of you that are doing it for years and years and years, I would say that just having my levels, you trade them on your own volition, you'll crush it, you'll get it. But for those of you that are, again, haven't been doing this for a decade, or even if you're me and you just like knowing what's going on, I would say always wait for that confirmation. You want the candle to open and close above that point, or I'm not going to trust that the breakout's real, and then it's not something I want to trade, right? So we're going to wait to see. Let's clear out some of this shit for you. Okay, so what we want to see then is pretty simple. We want to see this candle or a candle break above this line and close. That would be our confirmation to let's ride. Now, what do we do when we get to that point? Well, we're going to go through the options chain right now and tell you. So that said, we need to first figure out a strike, and we've already got it identified here. It's 683.5. So, if you're asking why, well, we're just pacing, letting the past, again, the past can be the future with the lights on if we let it, right? So we're just looking at what happened before. The market didn't like this at 683.50. Said too expensive. Turn the other cheek. let's just assume it says the same thing because nothing's changed, right? Like no one's way more optimistic about the future than they were a month ago. So why wouldn't the same thing happen? It should. So we're going to bet that this party's going to end at 683.50, give or take. So that's when we want to take profit and de-risk, right? So the same is true of what I said earlier. The more risk you want to take, the more your reward's going to be, right? But if you want to get rid of some of that risk, you also got to get rid of some of that reward, right? You got to pay a fee for somebody else to deal with it. So basically, you need to be in a position where you understand how much you're willing to risk because that will determine your reward, really. So again, you wait for that confirmation. I would say 683.50 is it's a little weak. I feel like isn't that a little weak?
Yeah. Oh,
Like, let's be more ambitious here. It's
but I mean that range when you're playing the ranges, that can be played
it
over
makes
and
sense.
over and over again.
I don't play it too safe. Whatever, we'll play it safe. We'll play it safe in some safe, predictable money as much as it can be predicted. Again, nothing is absolutely predictable, so don't believe any of that. It's an algorithm. That's how I'd describe it, as a probabilistic algorithm. Just determines probabilities. Basically, professional guesstimate. Seriously, it's a professional guesstimate. It's pretty amazing. So if you're young and watching this, don't let anybody tell you jack shit. They don't know anything. I'm getting paid to be a guesstimator, dude. You could do whatever the fuck you want in this day and age. And if I can help you in any way, reach out. I would love that. So basically, we're going to assume bullish characteristics here. It looks good. I mean, everything about it says bullish. We have no reason to think the market's going to fall apart in the next couple of days. We should just assume the trend will continue, and I think it will. And so doing that, we wait for the 15-minute confirmation. Once this candle opens and closes above that point, we are then going to turn our eyes to the options chain, of which we're going to look at the 685 calls. And we're going to go about 10 to 14 days out, right, in expiration. We'll give yourself about 2 weeks. Again, the more you want to give away risk, the more you give up reward. So if you want to de-risk, you can buy more time. Basically, that's the trade. If you want to take options that are expiring in 2 months versus 2 weeks, you're taking much less risk, but your reward will be much smaller. And honestly, these calculations are based upon following these contracts. So I guess that's my cover my ass disclosure. I'm not saying trade this on a different contract. This is the contracts I'm trading because this is what makes sense. So once it breaks out, we've got our confirmation. We go to the 685 calls. We find one that's dated like 2 weeks out. I can pull it up on my phone, or can you pull those up? Is that an expiration?
Yeah.
Expiration 2 weeks.
I mean, right now it looks like 14 days out, so 2 weeks, December 15th. They go by five white strikes, so like 680, 685.
Okay, so he's going to put the exact expiration in the chat. That's above my pay grade there. I'm handing that over to him for now. So I can stay focused on this. So once you've got the contract outline, again, he's about to post it in the chat, so you're going to have it in 2 seconds. We've determined that the 685 call makes sense. It's not too much risk. It's not too much reward. It's balanced, right? For those of you that are new or just following, this will be an easy win. We can get together so that we can learn how to be friends, right? So basically, once we get all those things in line, we go to our 685 calls, and I'm going to execute. So when we get all those things that have lined up, it breaks this line, and the chart is looking good. The 15-minute closes. I feel confident. I enter my contract at that point. All I need to do is this: wait for one of two outcomes. Cha-ching, take profit, or de-risk. Notice there was no negative sound effect to de-risk. There's a cha-ching with the upside, for sure. You get a cha-ching, of course. You made money. You should get that. But the downside is not a negative, nor a positive. It's neutral. It's neutral. You need to break whatever's in your brain that is thinking to you, he's wrong. It doesn't make sense. That doesn't even make sense. What the hell is he talking about? Trust me. It's a neutral. It's not a positive. It's not a negative. It's just a neutral. Risk management should be a static element, not a choice, not a reward, not a safety net. It's none of those things. It is a static element. There is no trade without it. So what I'm hoping this will prompt in your head is like a bunch of stuff, but primarily just shaking free of that, like, gotta manage risk as if it's a separate item. It's built in. You don't even have to think about it. As long as you set it, it's done. That's the idea. Is that this, again, could only win a third of the time and still make money, yet it wins 2/3 of the time. So that's what I'm trying to kind of, if you can pick up what I'm putting down here. So again, that trade goes well. I will be scaling out of that contract again. If I buy usually 3-4 of these, they're typically what's that contract trading for right now?
It was
$300-400
like
bucks?
519.
A little higher, so 5. So like, let's say I bought 2 for $1,000.
Yeah.
I'll sell one as we approach 683, kind of like all the major psychological levels. I'll just kind of like maybe sell, like most of the times not, like let's say it was a little bit cheaper and I had 3 or 4, I would sell 1 or 2 at a psychological resistance of like a round number, like 683, right? Like I would sell 1 or 2 there just to de-risk, but I'm still going to hold 2 for what upside exists, which is insane, right? With options, if you do it right. Again, if you do it right. It's just like holding a weapon. The weapon has no feelings or choice. Like you put it in the hands of someone who will protect you or someone who will hurt you. It's that simple. But it's the person that made the choice and did the thing. And it's the same thing with you with this. You can cause great harm to your money and to yourself in doing this if you don't do it right with options, right? Just so much as it is an exceptional tool to give the everyman leverage they would never have access to, right? Like, who's going to give me this kind of leverage? Nobody, dude. Nobody with this kind of liquidity. Are you kidding me? I can jump in, jump out with also almost no transaction fees. Is that a joke? Like, that doesn't exist, right? But it does. So it's just that I've realized now, and kind of being on the other side of this, of like really trying to institutionalize this to create access, they don't teach you shit. Like, really, none of us were taught jack shit. It's pretty unbelievable how much they haven't taught us these simple instruments that like are so straightforward. Ugh, neither here nor there. I don't want to rant. So we've got our bullish trade calculated, locked and loaded. You're already in it. The profit hits. We want to scale out and move on to the next one, right? Celebrate it with a fist bump and then keep it moving. But here's the beauty. We're also going to set up for the what if to the downside, right? We don't ever want to be unprepared. Like in any situation, there's absolutely, if anyone ever tells you that, run the other way. Like, why wouldn't you be prepared? I'm not saying change your whole life or I'm saying if you could put a small amount of time to get a huge amount of upside, wouldn't you want to take it? This is that. So we're going to be prepared for the downside because, again, what did we talk about in the very beginning? That markets have like basically like a state, a sentiment state, whatever. We're in a bullish state, but that can turn. And if you're in the position to take advantage of that turn, my God, will you be rich? I want to get you guys to the point of where you're sitting there for that turn, right? That's what this downside trade is. So we've got the bullish trade calculated. Again, I hope you guys could notice in us talking about it how simple and calculated it is. It doesn't need to be anything other than that. This downside is the same version of that, but this is the counter to the trade that really offers, I think, the 10x potential as much as the risk management in and of itself. It's pretty insane. So should this violate the trend, that means that it's going to act violently, right? Because this 200-day is a really sturdy trend. So something pretty intense has got to happen for it to buck a sturdy trend. Wouldn't you say?
Yeah. I like that line there.
So, okay, great. That's something to work with because basically what we're saying is it's just going to keep doing the same stuff, bullish, until we die, unless, right? We're preparing for the unless. So, should this thing violate right here, it's already spelled out plain as day, 679, 65. I'd like to see confirmation a bit lower. Hey, I'm just wrapping up the stream. Do I have to call you back? All right. Everyone say hi to Neil from Benzinga.
Neil, what's going on, man?
All right. All right, bye.
Dun.
He's the GOAT. And for those of you who have been here with us a long time, you've seen me stream with that handsome gentleman before. That was old school, old days. Anyway, so here we are.
Okay.
Talking about the downside. This is the big play. It's not the risk management. It's the 10x upside if everything changes. You need to be prepared for that. Now you will be. So that said, all we really need to do is figure out, okay, what downside is there to take advantage of? I would say that it's getting pushed down. Like this candle's a good representation. It's just getting pushed down from 679 to not far, $2-3. Like there isn't much to go unless it's all falling apart, right? So like what I'm telling you is no, don't be I'm not trying to drive fear. No one's saying it's going to all fall apart, but it could. And what I'm saying is we're going to be prepared so that if it stays together and just continues as is, we're going to make money. If it falls apart, we're going to make even more because that would mean it changed states, right? And we were positioned before it happened, which makes it look like we have a crystal ball. So the market rewards us handsomely for that by the contracts just exploding. So that's our 10x trade is actually the downside that most people look at as the risk management of it. It's insane to me, but cool. So should we get a confirmation candle below? Let me zoom in a little more again, harder on the laptop. I think that this representation from today in pre-market, honestly, is pretty straightforward. That the market's going to try to build a floor at 678.5. So basically, we just need to watch that level. So all you guys will be waiting for, and like for instance, if you get this email to follow up, which if you want this like breakdown completely just detailed and sent to you, do one of two things right now. Put your email in the chat or scan that QR code in the top right corner. Do one of those two. You can have all this shit. You're like, I don't want to listen to you for an hour, but I really want the information. Cool. You can get it in an email. I like just being straightforward. I'm not trying to like trick you into staying forever. Like we'll send it in an email if that's how you'd like it instead. I just want it to be used and I want people making money with it. And then ideally, yes, tell everyone you made money with it and then they buy it. That'd be cool. But only after you've made all your money. So again, put it on the table, man. So the bearish downside is the most majestic part of this because that's where we're going to make insane money if it happens, right? So we'll look at you could even set this as simple down to alerts, setting price alerts. But if we get a confirmation below 679.70, I'd say I'm pretty confident. I would like to see an hourly close to like really make a big bet in the longer term, which if you're a premium member, you'll be on the live streams with us Fridays where we talk about stuff like that. But nevertheless, for the short term, I really like the idea of that as a confirmation. And then just aiming for honestly like 670. I would even say like 678 almost at the money, unless they're too expensive. Because again, if this gets pushed down, those will pay handsomely. 676 in it. Yeah. Do 677. Because I like the 676 level. So again, say 10 days out, 677 on put. To the downside is the contract, exact contract we're talking about here. The confirmation we need is a break and close of this candle below the SMA 200, as well as I would like to see it below 678.5, but I'll live with 679.5. So a close below that would be enough for me to initiate the trade. And I would love to see a break of 678.50 for this really like the bucket to spill of just bloodbath, or this trade would make a killing. That's pretty much it. So sorry I talk a lot. That was long-winded. So it's going to be an abrupt ending, but there you have it. You've got it all now. The world is your oyster. You're set up to make money regardless of what happens. So congratulations. You're in the true position of power. No matter what anyone else does, no one can take your agency because you can make money with this market, up or down. You don't give a shit, neither do I, because none of it matters. We're set up to take advantage of either side, make our money, get in, get out. You have agency. That's what this is. So congratulations. I love you. Goodbye. God bless.
See you guys.